Hello and welcome to Money Matters. As e-commerce and digital payments become more commonplace, the switch to using a central bank digital currency, or CBDC, will likely be easier for users to adopt. With a one-to-one exchange rate to the national currency and backed by the central bank, remittances are expected to become faster and cheaper. Central bank digital currencies, or CBDCs, are attractive to governments for the speed with which transactions can happen, as well as the ability to program them with payments, such as unemployment benefits or allowing spending at specific outlets, such as medical clinics, groceries, or other retailers. The technology relies on blockchain, but the real push for governments to adopt CBDCs was Facebook's announcement of its launch of Libra, now called Diem, its exclusive digital currency. With a user base of 3.45 billion people in the Facebook family, greater than the population of China, India, and the US combined, governments realized they needed to adopt a more efficient way to complete transactions.
What's interesting about Libra is that it was a credible challenge to major currencies, the dollar, the euro, the RMB, in a way that Bitcoin had not been. But yes, Facebook, because of the scale of its user base and the ability to use it in Facebook's emerging electronic payment systems, meant that it was a very credible competitor. And as a result, we've seen a pretty global effort from the Group of 20 and others to bring that into the regulatory environment.
The push to go digital became greater with China launching its digital yuan, or ECNY, last year. Phase 2 of a pilot project of wholesale CBDC between Hong Kong, China, Thailand, and the UAE was launched earlier this year.
A pilot that we are doing together with a few central banks, plus the Bank for International Settlement, is a multi-CBDC project, which means each central bank will issue their own CBDC. In future, if you do the remittances, you don't have to get it through the correspondent bank. It will be faster, cheaper, and it will be very conducive to trade finance as well.
There are two types of CBDCs, wholesale and retail. Wholesale CBDCs are for use between governments and large institutions, making large settlements faster and cheaper. Retail CBDCs are for transactions between individuals and corporations, basically the same as an official currency. According to Benedicte Nolens of the Bank of International Settlements, or BIS, wholesale CBDCs tend to be better for advanced financial hubs like Hong Kong or Singapore, which have small physical footprints, small populations, and high financial inclusion as well as high trade. Retail CBDCs are more about financial inclusion, so people who are unbanked, those without bank accounts or access to mobile money, can have a CBDC account where they can make and receive payments from a digital wallet. The only issue for developing countries is that the mobile phone infrastructure might not be enough.
If you don't have a good Wi-Fi infrastructure, and the individual needs to have the smartphone, that's where you get your financial inclusion, is if you can somehow connect to the mobile phone number. And that's been seen in Africa, for example, right? The M-Peza example is the use of the phone number, because that people most do have, right? Maybe we don't all have a smartphone yet, but we do have that.
Both wholesale and retail use of CBDCs are being tested by China, as it still has 225 million unbanked people.
China has been testing out the DSAP, which is a retail-based CBDC. And I think, Hong Kong is being part of the pilot at the moment, as far as I know. And then, I think one of the use cases could be, to facilitate the citizens in both jurisdictions, allowing our people in Hong Kong to use the DSAP in the Greater Bay Area as a kind of a currency to settle for retail usage.
China's ECNY pilot scheme isn't going unnoticed, as U.S. Federal Reserve Governor Lael Brainard has recently pushed for the launch of a digital dollar. She said the issuance of a CBDC in one jurisdiction does potentially have significant effects across the globe. As to whether the ECNY is a threat to the U.S. dollar as a settlement currency, finance lawyer Douglas Arner doesn't think so, since China is more focused on capital controls and restricting the flow of money across the border.
You can actually set it so that it only works in small values outside of the country, which then gives you much better control. The design of the Chinese digital currency, there's no real intention of liberalizing capital movements at this stage. And in fact, the technology allows you a better way to monitor that.
Gary Ng from PwC's Risk Assurance believes it may be difficult to unseat the U.S. dollar as the main settlement currency.
More than 80% of the trades are settled in US dollar. So I would say for different central banks, if they are going to promote the usage of their CBDC in cross-border trade settlements, it means they need to find use cases. They need to find it more efficient, less costly kind of payment vehicle to really drive the usage of the CBDC.
You could essentially just make that transfer straight without referring to the US dollar?
Actually, the trade parties can choose whatever settlement currency they would like to use.
Benedicte says there are 3 requirements in CBDCs. First, that they do no harm. So there could be the potential for leading currencies, like the US dollar or the euro, to overtake a national currency if there are no limits on their use within a foreign country.
A lot of places in Southeast Asia have a natural propensity to want to have dollars. So again, if you function in a scenario where there is no limits on wallet size, no limits on transaction size, then yes, a country can lose control of their own currency.
She says this could be addressed by limiting the size of transactions in these currencies or any currency that isn't the national tender. The second requirement is that CBDCs should be interoperable across platforms within countries, so usable on different platforms like Alipay, WeChat Pay, or PayPal, for example, and they should be interoperable across borders. Third is that they are compliant with anti-money laundering rules and sanctions across borders, the same way fiat money is.
It's an ongoing surveillance thing. It's ongoing monitoring of the flows. It's a tough infrastructure to create.
With the development of CBDCs, experts expect to see more players in the financial space that aren't banks.
A trend, and an important one, I think, for regulators around the world to have new categories of licenses for payment providers. A system whereby you are allowing a variety of new entrants, payments providers, not only Octopus, but Alipay, WeChat Pay, and others. And what you are seeing is licensing requirements, but much less burdensome regulation.